Hey everybody, welcome back to Layman Loans. In this video, we're going to see whether is it sensible to invest in stock market by taking a loan. Fundamentally, you have to know what is the stock market, what is a stock, and is it even sensible to put your money, that to money which you have got from loan in a stock market in order to get returns on it. Firstly, a stock market is a place where companies actually list their stocks and people will buy the stock or sell the stock, and based on this demand and supply, the stock prices keep changing. So there's a huge wave of speculation involved in stock market, and the actual value of the stock is never stable. It keeps on increasing or decreasing based on the demand and supply. We never know whether it is going to increase or decrease. We buy it and it might reduce in the same day or it might increase over a period of time. We never know. So what is a stock market? What are the different stock markets? And what is an index? Let us see what are all these. And you can always go back to another channel what we have called Layman Investments. We have made in detailed video on what are stock markets and what are the kind of stocks you can invest. All those things are available in a separate channel called Layman Investment, and we leave the link for that particular channel as well in the description below, and you can check out that channel videos as well. But in short term, for this particular video, let us see whether you can invest your loan funds in a stock. Fundamentally, in stock market, there is something called as a Bombay Stock Exchange called BSE and another national stock exchange called NSE. These are two different stock markets available in India, and the index for the Bombay Stock Exchange is called Sensex, and the index for the National Stock Exchange is called Nifty. There are 50 listed companies in the National Stock Exchange, and there are tons and tons of companies listed in Bombay Stock Exchange. So these 50 companies are called as Nifty 50. If you see State Bank of India, it is one of the blue chip bank companies which are listed in the Nifty. It is very much part of the Nifty 50 bank, which is there in the National Stock Exchange. If you go to, say, State Bank of India and say that you want a 10 crore loan and you're going to buy State Bank of India shares, do you think the bank is going to consider that as an investment and lend you? 100% no. Banks themselves will never lend money to buy their own stock as well. Alright. So you are actually going to State Bank of India and asking for money to buy their own shares, and you say that it is likely going to increase in value, so you lend me money. Do you think the bank is going to give you? Definitely not, because stocks fundamentally have the nature to increase in value when there is a high demand and decrease in value when the supply is high and demand is low. When the stock price are going to increase, people can really not judge or give a concrete answer. Many people make predictions based on current market trends, foreign exchanges and foreign investments and economic policies, people's movement and overall movement of other banks. There are several cases and several scenarios involved in order to decide the actual value of a bank stock or any stock for that matter. So a bank will never lend money to buy its own stock, but it will always lend money if you're going to invest in a real estate, if you're going to build a home, you're going to build an apartment and rent it out and make more money out of it, bank will definitely lend, because that's a tangible asset on which you are really investing. Whenever you're taking a loan, always go for tangible assets. So what are tangible assets? Anything which you can touch and feel, and anything which has a definite value, and it has to also have very low depreciation. If you get a phone today, you get a loan and get a phone for 1.5 lakhs. The moment you take the phone out of the box, the value of the phone depreciates by 30 to 40%. You use the phone for another 3 months, the value of the phone depreciates by another 20%. After 1 year, you have the value of the phone to only 20 to 30% of its actual buying value, right? So even though the bank funds your phone and gives a loan for that, in reality it's a high risk. That is the reason they levy a lot of interest for consumer durables. Alright, and there's a lot of processing fee and pre-closure fees and all those for consumer durables. Higher the risk, higher will be the charges for the bank. Whatever they are putting on you will also be higher. But in the case of home loans, they are seeing a actual tangible asset, a physical concrete building which is up there, and you're pledging that and taking a loan. Then they are pretty much clear on what is the rental value it can generate and what is the overall value of the particular building. Then the overall repayment tenure is also given to be much higher. They give a 15 or 20 year or even 30-year loan in order to get a home, and the overall repayment EMI amount is also pretty low. So coming back to the question, should you invest in a stock by taking a loan? That is something which you have to ask yourself, because stock market is always unstable. We can never actually predict what is going to be the next move in a stock market. If you say there's a I've heard this story from one of my friends wherein they took a loan, they used their credit card, they had an actual credit limit of around 3.5 lakhs. They used the entire 3.5 lakhs and got gold, and with that gold they pledged the gold. With 3.5 lakhs of credit limit, they got around 3 lakhs worth of gold, because rest of the money went off for making charges and wastages. And after that they pledged that gold in a gold loan and took money, which is about 2.7 lakhs or 2.7 lakhs is what they got. This entire money he was actually putting in stock market in day trading. At some point of time, in a couple of months, he lost almost the entire fund, and the total value of the stock holding what he had came down to some 3,000-4,000 rupees. Alright, because anything can happen. Very easily the stock might go up or go down as well. People cannot really make a foolproof decision that this stock is definitely going to go high. Nobody can ever do that. Alright, because of this very reason, he went into extreme depression. The entire family was completely shapeless. Like, they don't know really what to do next. And never put yourself in such a situation. Now, he had to actually pay the credit card loan. On top of it, he has to pay interest for the EMI, the gold loan interest as well. So typically, he had a 44% credit card interest rate which he has to pay, another 20 to 24% gold loan interest which he has to pay. Now he has actually lost the entire capital in day trading in stock market as well. So there is no actual tangible asset worth 3.5 lakhs for which he has taken a credit card loan, and even if he wants to sell the entire asset, now it is worth 2,000-3,000 only. So he is right now in soup. Alright, and it took roughly 2 to 3 years for him to ever get out of such a situation. It is definitely not advisable to ever take a loan and buy stock in the stock market or do day trading. Always invest in stock market with your savings or as a systematic investment from your regular income. Never try to take a loan and put money in stocks, because stocks are always slightly more risky, and you should be in a position to be patient for years together in order to actually see appreciation in stock value, because stocks are nothing but a piece of business. You will never be able to get overnight success. Any business to be successful or in order to reach great heights, it takes a lot of time. It takes years together. So you need to have that patience and discipline to keep investing and be silent for years together and observe the track of how the business is performing. Only then you will be able to make a lot of money from stock market. If you are in a kind of following the wave pattern wherein you buy when everybody is buying and you sell when everybody is selling, then definitely you're going to lose a lot of money. And if you're going to take a loan, you're always in the pressure to make enough money to pay EMIs. In stock, you might make money today, tomorrow you might not make. And that is not going to be a stable cash flow generating asset for you to make enough money to pay the EMI. So our recommendation from Layman Loans is never buy stock using a loan what you're getting from a bank. If you're looking for any financial planning advice or guidance in getting a new loan, you can always reach out to us by filling up the form mentioned in the description and the comments below. I hope you like this video. Looking forward to connect with you all in the next video.